What's going on, traders? Sandro O'Connell here with Pristine Capital, coming at you with yet another market recap video. It's February 4th, 2022. Thank you so much for everyone coming out and watching this video with me. Before we get into the content, quick first disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades, any of your trades, or anyone's trades for that matter. All right, let's dive into this video. Oh my gosh, today was like 10 trading days in one. I had one of my better trading days of 2022, to be honest. It was insane, but I know a lot of people out there really struggled. So let's talk through it. First off, box scores. S&P 500 finished up 0.47%, right smack dab in the middle of its daily range. NASDAQ QQQ finished up 1.26%. IWM small caps finished up 0.43%. The dogs of the Dow were down slightly. And the ARK Innovation ETF had a really good day of 5.37%. Volatility finished down across all of these indices, which is good. And you can see the breadth was pretty mixed. We had positive breadth in the small caps. We had negative breadth in the S&P 500. So I would say in terms of the breadth, this is a very odd configuration. We rarely ever see this. And let's take a look at our Finviz heat map. Before we do that, let's just talk about the jobs numbers real quick to set the stage. The jobs numbers came out this morning. They were a massive beat. And what we saw was way more jobs created than expected. And we also saw wages going up. So you might think, hey, that's a good thing, right? But we're in a market environment where good news is bad news. So because, there's a couple different ways of looking at it. The market might see this as, oh, the labor market is doing even better. Now the Fed can go ahead and be more hawkish and, do more rate hikes, roll off the balance sheet faster, etc. And that's the really negative interpretation. Second interpretation is, everyone is super worried about stagflation. We all know the Fed is going to hike. The last thing that we want is the Fed hiking into a slowdown, and so a weak jobs number, means we're still gonna have to tighten, but we're gonna have to tighten into a slowdown. We ended up getting that hot jobs number, and before we jump into the heat map, we actually have to do this justice. Let's jump over to our treasuries, because I think that was really the driving force behind some of the wonkiness today. So these treasuries, talked about this in our webinar early in the morning, but they broke down once again. So these 10-year treasury futures, look at the last time that they broke down. They broke below this monthly value area. It was on January 3rd, and we had a huge sell-off following that. We consolidated for a couple weeks, and now after this jobs report, the 10-year treasury futures really tanked. And, it's not the end of the world. With a good jobs report, that just means, hey, economic growth might be a little bit better than we expected. So for that reason, 10-year treasury yields are going to go up. But we all know these growth stocks, and really just the market in general, has a tough time with a rising 10-year treasury yield. Because, all these assets, they're discounted using, some form of treasury. The most common is the 10-year treasury yield. So you raise that discount factor, and suddenly the valuation on all of these companies goes down a little bit. So I was watching the 10-year treasury futures like a hawk today, and that was really, the main thing. These got all the way down here, and they were down like 0.7%. The last thing that I wanted to see was for these to just take a nosedive and completely fall apart. But anyway, despite, sort of like the craziness in treasuries, there were certain points during the day when the market looked fantastic. Like it was like, geez, this thing is, going to rip higher. Let's look at the hourly chart for the S&P 500. And we're going to go from the hourly to the daily to the weekly. So look at this hourly chart. We had a gap up. This was due to Amazon earnings yesterday. Amazon had a, better than expected earnings report. A lot of people were crying about that earnings report because they wanted it to be super bad. Anyway, so we got the bounce, right? Yesterday when the market closed, futures ripped higher, and it was like, let's go, futures are ripping, this is awesome. Then right around the European Open, the market sold off, and in the morning the futures were trading negative. We basically chopped around for most of the morning, and at any given point you might have thought, yes, the market is about to drop. Oh wait, no, it's about to turn up. No, it's going to drop, turn up, drop, turn up. And then towards the end of the day, it really looked like we got our river card, where this is right around lunchtime. The market broke out of this range and moved up to the upside. One of the levels I was really watching, and this is a dealer gamma level, was 45.20. And I had a feeling as we got closer, I was like, are we about to close above 45.20? That would be super bullish. And then at the very end of the day, we just failed at that level. And look at this high volume selling that occurred right at the end of the day. So it was like bullish, bearish, choppy action where you could really get hurt, then bullish, and then bearish into the close. So I would imagine this was a very difficult trading day for most traders, especially like if your risk management isn't under control and you don't like taking your stops. Today was probably pretty difficult. Same thing if you like trading breakouts. You know, you might have thought this was a breakout. You might have thought this was a breakdown, breakout. You know, so very, very difficult day for the intraday traders. And you can see, you know, we're going to be inside value next week. So going back up to the daily chart, look at this. So what you'll notice is the 20-day simple moving average, that's my pink line. That's pretty much like a huge line in the sand that a lot of trend following strategies use. So to get above it, that's showing, hey, maybe we're going to go back to all-time highs. You know, the downtrend could be over. But look what's been happening the past couple of days. We've sort of been flirting with the 20-day. We cross over it, we cross under it. But for some reason, we just can't manage to close above it. And today, into the last hour, it looked like we might close above it. And that would have been the happy path. But right into the end, there was a puke. My trend model flipped negative. And, you know, a lot of the gains, you know, at one point we were up like 1.3%. And we closed, you know, almost flat, up 0.34%. So this is a highly ambiguous close. And I know from my experience trading, there's been times in the past where I see this going on and I get stuck in a bias. Like I get stuck in a bullish bias and I'm like fighting it. Now it's going to break up. But from my experience, when you get these struggles to get over the 20-day, but for whatever reason, you just can't, a lot of times it ends up in like a big gap down or some sort of negative event. I'll show you what I mean by that. Let's just go back in the chart and we'll look at a couple times that happened. So the last time I remember was really in September. Let's look right here. Yeah, it happened a bunch of times. So look at this. Like this is, yeah, early September. Let me zoom out a little bit. And let me flip back just so you can see what I'm talking about. Okay, so this was August. This was a pretty big corrective sequence in the market, right? And we pulled back to the 20-day. And on this day, it looked like, oh my gosh, we're going to get above the 20-day. We're so close, we tag it, we fail. Next day, we tag it, we fail. Next day, we get a nice bullish candle, but we fail. We fail again. And then you just get that whoosh lower. Same thing here on this next attempt to get back above it. We made the attempt, we failed, and then the market gave way. This one over here was the closest to the scenario in price that we're seeing today. And it was October of 2021. So not that long ago, just a couple months ago. Look at this. So this looks almost identical to the setup we're seeing now where we had one day, closed pretty much right on it, maximum ambiguity. Next day, we just couldn't get it done. Third day, you know, we really just broke below it. And then we got, you know, pretty much like a bad day of price action before we bottomed. And I just noticed like this sort of pattern does play out a lot when you're in these really indecisive markets. So as I look ahead to this picture that we're currently seeing, you know, this was back in November as well. Same thing. We just couldn't really get above the 20-day and then, you know, another whoosh lower. Look at what we're seeing now. You know, we're seeing a similar dynamic here. We just can't manage to get above it. And the fact that, you know, we had every reason to just stay above today and we puked into the close, you know, that doesn't really leave me very optimistic for Monday. So yeah, the price action definitely, you know, I don't want to say it's ominous, but definitely we're seeing some volatility, and this is not like an easy market like we had in 2020. You really have to have a process and use your risk management. NASDAQ ended up closing positive, found support at this monthly value area low. So you could view this as, hey, incrementally bullish or incrementally bearish, depending on how you're looking at it, really. So that's a bit ambiguous. Let's take a look at the Russell. This thing looks sort of similar to the S&P 500. Like, we're trying to hold up, and we're just kind of like riding this short-term EMA to the downside. Doesn't really look too confidence inspiring. And then if we go to our dogs of the Dow, looks very similar, right? We're just kind of riding the 20-day moving average, but we can't get above it. Let's look over to the VIX. And so this was another thing I was watching very closely. So the VIX put in a red candle, which is good, but we closed well off the lows. So you can see sort of like a doji candle. I guess it's red. Again, this you could look at it glass half empty or glass half full, really depending on your bias and how you want to view it. Well, let's take a look. Let's go over to our heat map, and then we'll talk about my trades for the day. I had a really good trade in Snapchat today, which is cool. So looking at this heat map, we had Amazon just kill it. Amazon was up 13.54%. And I think it's a little bit strange that like we couldn't really get it going, even though Amazon was up so much. And we also had Tesla up. We had Nvidia up as well. So from that perspective, this looks a bit risk on, because Nvidia and Tesla, those are like the two most risk on stocks in the S&P 500. They tend to move positively when growth is doing well. But overall, the breadth was a little bit weak. Let's take a look at Tesla. Tesla chart looks pretty good. We're kind of chopping out a range here. Maybe we break out, whatever. Nvidia doesn't look quite as good. Yeah, this one's kind of riding that downward trend line. Another thing, just to add to the ambiguity, crypto actually had a very strong day. Bitcoin is up at 40K and change. I actually took a position in the Bitcoin futures ETF, BITO. This is doing something a little bit different. And at a certain point during the day, I was like, how bearish can this be if Bitcoin and Ethereum are ripping to the upside? So this is a positive divergence. So we're getting positive divergences from, crypto. We're getting like a negative divergence from treasuries. Then some of these more risk on stocks look okay. We're just getting a super mixed picture. Let's put it that way. And it's really tough to pick a side and have conviction in this kind of market. So let's take a look at my trades for today and really just how I handled this day's action. So early in the day, I got heavily involved in Snapchat. You can see I entered at 9:38, and I just looked, and there were a couple of factors that really just led me into Snapchat. So everyone got super bearish due to the Facebook earnings. And the stock sold off, a good, 25% yesterday. And then the earnings came out, and the earnings were fantastic. One of the research, services that I subscribe to, they do fundamental research. They were like, this Snapchat earnings report was fantastic. The slowdown that we saw materializing on this earnings report, basically like this was an expectation breaker. We thought they were going to slow even more. And they turned a profit, users are growing, like, looks fantastic. Like, this move is justified. So when I saw that the market was weak on the open, I just pounced on this thing. And it was pretty close to the 20-day moving average. So I pounced knowing, hey, Snapchat just reported great earnings. This historically has been a darling company that has been sold off into the abyss, as if this thing was completely done. It's also a household name that most fund managers, whatever, they're familiar enough with the product. This is a quote unquote like safe name. Same thing with retail. Everybody knows Snapchat. It's very liquid. So it just seemed like the perfect vessel for a growth stock recovery, expectation breaker. So I went pretty heavy in this thing. So I added a position. I went small in the beginning. And I just saw it started working pretty quickly. And I was like, I'm going heavy. So I went heavy at 35.07. And, this is the benefit of keeping a big cash balance when the market is ambiguous. I had a big pile of cash in my portfolio, and I pretty much deployed it all in Snapchat. So yeah, that's part of being a trader. Understanding your risk management, and also being able to concentrate in positions when you're taking a tight risk reward entry. So I got into Snapchat, and this thing gave me like a 10 to 12% gain intraday, which is fantastic. So I scaled out of 20% of my Snapchat for 40.26, but this trade really just made my day. The fact that this one was so strong. So I want to keep looking for these growth stocks. Some of them are so beaten down, and some of them are going to report great earnings. And those stocks are going to get sharp balances because a lot of them are down, 70%. Like for instance, if a stock goes from $100 to 30, 70% drop. If it then goes up by 50% in one, fell swoop, then it just goes from $30 to 45. So it's not like it even has to recover the whole move. It just has to recover part of it in order to get a really good return for a new entrant into the stock. And then in addition to that, when the market was strong, I just wanted to take some profits and just be prudent. I want to make sure that, especially in this topsy-turvy market, when things are going my way, I want to de-risk, take something off the table. So I took off some of my CF common shares for 75.01. I had paid 71.30. This was during one of like the intraday, good periods in the market. So I have 40% of that position left. I did some options trading as well. Had a small winner in this SPY trade, closed out for 487. I paid 430. That was good. I tried Hut 8 mining, and this one took it off for a little paper cut loss. That's the good thing. Like when you're sizing appropriately, you're managing your risk, and you're using tight entries. There's nothing wrong with changing your mind. The worst thing that you can do is just not, something goes against you and you just don't change your mind. You're stubborn, whatever. And yeah, so took that one off. Apple, I had a nice winner in this one. I day traded some February calls, put them on for 340, took them off for $4. So that was another nice trade. This was a 2-star trade. So not like a full size for me, but I thought there was a nice edge here, so I took a little bit more size. And that gave me some nice buffer and sort of just like helped my confidence for the day. I rolled that Apple into a smaller position for April. I put it on for $10.40. And so this is where this was the best part of my trading day right here. When the market started to look like it was getting weak into the bell, I started taking even more risk off. So that roll trade that I did, I just took it immediately off for a little 30-cent loss. So I was like, you know what? This is a roll trade anyway. Like, I just don't even care. This market looks so ambiguous. I'm getting this thing out of here. And then I closed out this Facebook for $8.50. I paid $11.15. This was a 1-star trade for me. And this was the key for me. Sometimes you can put on a trade that ends up sort of like, the trade like hangs you. Where it's like that one trade you put on that like turns into a 0 or just ends up being a big loss. And it sort of just like screws up your P&L. For me, this one had the potential to do that. So at 351, I just took this bad boy off. Facebook, I had these February 18th calls. Maybe they work. There's a chance these things could like triple. I don't know. But I just took them off for a manageable loss, little paper cut. I had some other good trades during the day. So that's another thing. When my P&L is positive and it's a nice number, whatever, I'm doing pretty well. That's a lot of times where I'm like, let me see all the losers that I currently have on, and let me just get rid of them. So I took those off, and then I got long some SPY calls in small size. So with these SPY calls, not SPY calls, SPY puts, excuse me. With the puts, I actually have kind of like paper hands with puts. It's tough because shorting the market is just one of the toughest things to do. Overall, it's much easier to make money going long the market, although it might not seem that way over the last month or so. But yeah, what I'm finding is sizing smaller is helping me. Because when you're at a smaller size for options, especially, then it's like if it goes against you, you're not like paper handing out of them because you were basically sized for max loss. So I put those on, and then it ended up working out where the market just kind of faltered even after the bell. So yeah, the SPY puts I bought are already marking at a little profit. So yeah, all in all, this was a very ambiguous close. Oh, another thing that I did was I shorted energy. So this one, again, I put it on very small. Where is this? I put on I got these XLE March 19th 69 puts. Just put small trade for me. I see this area of the market getting more and more crowded. Energy has taken on a bit of a parabola shape. And yeah, this one, energy, you know, it's in an uptrend, so that's like, you know, it's tough to short strong uptrends like this, but I just see this area of the market getting more and more crowded, so I'm like, I'm going to take a shot at shorting energy here. You know, of course, if there's like a geopolitical conflict or whatever, you know, it's not going to work. But again, I just went pretty small, so it's okay. And this one into the bells, marking at, you know, a small winner. So yeah, now I'm in a position where I took a target in Snapchat, you know, added Bitcoin just in case that wants to just fly off to the races. I have little small hedges on in my portfolio. You know, if they go against me, it's not going to be the end of the world. I don't have to paper hand them. So yeah, today ended up being a good day for me. And into the end of the session, it was really just about protecting it. And I think we all have to do that when we're trading, like especially in this environment, when you get reasonable profits, you know, just move to protect them as quickly as possible. So now it's the weekend. And every weekend what I do, I put this together, you know, on Saturday and Sunday. I do a weekend market analysis video, and then I do a weekend watch list video for all Pristine Capital members. So I'm very excited to dig into that this weekend, especially when we get these really ambiguous markets. That's when the weekend analysis, you know, it's the most fun for me to put together, because I love just piecing together the market puzzle. With that being said, that about does it for this market recap video. Remember, it's the first week of February. It's the beginning of a new trading month. If you're not doing so hot, you know, say if you made some mistakes today, whatever, just remember, do not dig your heels in. It's okay to take off a loss. You know, it's okay. Sometimes you take something off for a loss, you free up the capital, and, you know, you end up getting a nice fastball at the middle later in the month. So, yeah, just make sure you get some time off from the screens. Enjoy your weekend, everyone. I'm actually going to happy hour after this, so I'm pumped. I'll see you all over the weekend. Talk to you later.